Why does the stock market discount high quality companies? I don't know, but I took advantage of the discounts offered on Adobe and I bought shares recently. The stock market decided that Adobe, which is a high quality software company, was not really all that desirable and really sold off the stock. And I picked up Adobe shares because I believe Adobe is a wonderful company. And I'm glad I did so. I've made a nice short term gain and will be holding the stock. I'd like to go through and share with you my analysis on Adobe and share with you my plans on this stock. I'd like to share my process that I go through as I look at a company and determine if I want to buy a company, if I don't think it's a good stock, and if it's a really terrible stock, I might even decide to short it. In this case here, I bought shares of Adobe, and I'd like to take you through what I was seeing and why I pulled the trigger. And at this point, we'll continue to buy additional shares in Adobe. So first, I'm an individual value investor, and I do not make any recommendations to buy, hold, sell, short, or buy options on Adobe. None of what I'm doing is financial advice. It is just for educational and entertainment purposes only. I hope you find it interesting. One more thing is I'm being sponsored by Mumu, which is a brokerage company. It's really interesting. They also sell crypto, and they are offering a nice offer for new account holders. If you open a Mumu account with $1,000, they'll pay you 8.1% on that balance for 3 months. And then after that, 5.1. It is great to know that we can make 8% on a very low risk investment for 3 months. They'll also give you 15 stocks when you open an account with $1,000. And I'm looking forward to receiving my 15 stocks. I opened my account a couple weeks ago and look forward to getting those stocks. If you want more information on Mumu, please look at the video details and I'll put a link there that you can use. And I would get credit if you opened up an account. Thank you. So back to Adobe. So Adobe has been around for a long time. And one of the key areas that I look at before I invest in a stock is the company. It's really important that I believe that the industry has a lot of value, and value is in the form of a couple of things. First, the company has to have a moat, a competitive advantage, a barrier to keep competitors from coming in and taking their customers, or competitors coming in and competing for the business and shrinking margins. So that moat is really important. If you study the most valuable companies on the stock market, they tend to have really strong moats. It could be a combination of the brand, and people just are really comfortable with a brand. That's part of the moat. It could be intellectual property patents, which is the case for Adobe. They have patents on product, innovations, technology, and they have a really solid brand, especially in the area of graphic arts and creative. They are the number one company in that category. So Adobe has a really strong moat, in my opinion. It's also a wide moat, and that makes the company valuable. That's one of the reasons why this is a $238 billion market cap company. It's because the market believes, hey, this is a valuable company. Software companies tend to be valuable. Software companies have a business model where they develop a piece of software, they sell it to thousands, if not millions of customers, and then they make money off each customer. Even though they don't have to produce a widget or a physical product, they're creating intellectual property. It's a software that customers will download and then use. They'll provide really good customer support. They'll continue to make the product better and better over time. It's a very lucrative, profitable industry. No big surprise. Microsoft is one of the most valuable companies in the world, software company. If you look at Alphabet, I consider them in big part a software company. So software companies are very valuable. Therefore, when it comes to valuing Adobe, I put them in a quadrant of a highly desirable company. Now, I know that I like Adobe, but I want to have a discount on a stock. And I'll get to how I valued Adobe and how I determined what the discount is a little later, but that's also important in my decision. I want to buy into, or I want to believe in the company. I want to believe that the industry is just a high quality industry. And I want to know that I'm getting a really good discount. One last item is the balance sheet. So the balance sheet will tell me if a company is going to have a lot of problems that they are just going to have to deal with. If a company has a lot of debt, it's going to really hold them back. They're going to have to really pay off those debt payments and really take all their cash and just pay for their responsibilities. instead of growing the business, instead of creating new products, instead of competing against their competitors. And to me, having a quality balance sheet is a necessity. In the case of Adobe, they have an excellent balance sheet. They actually have more cash than they do debt. That makes it a very strong balance sheet. So I went over the value of the company, very valuable. The risk of the company is very low. Their balance sheet's very strong. Their industry is growing. Adobe is growing. So all those things look really good to me. So let me get into the fundamentals and share with you what I'm seeing that formed the opinion I just shared with you on Adobe. So the company is close to a $20 billion revenue company per year. And that's a pretty good size for a software company. Their forward PE is 28, which is, I think, reasonable because it is a software company and it's a growing software company. Analysts have looked at Adobe and they have a buy rating, and a good number of analysts are providing that opinion. Overall, they have a price target that's 12.5% higher than the current stock price. And as you'll see later, that's somewhere in the neighborhood where I'm at. So I don't necessarily follow analyst reports, but I like looking at them to see, based on my analysis, am I somewhere in the ballpark of where other analysts are? Are there a few analysts that agree with me? Or am I completely, out in a position where there's no analyst that's agreeing with me? In this case here, I'm agreeing with the analyst and the analysts are agreeing with me, which is really good to see. So the company is growing. If you look at their revenue growth, the company grew 10% in 2023. And if you look at their quarterly growth was 11% in the most recent quarter. So the revenue is doing really well. If you consider this is a big company, $20 billion of revenue is a lot. Growth of 10%, that's $2 billion of growth. So very good growth from the company. When we look at their cash flow, software companies tend to cash flow really well because they're not having to maintain factories and big production lines and big supply chains and all that good stuff. They're basically hiring really intelligent software developers and creative people, and they create a product that is an intangible product that is then sold. So having said that, the cash flow for Adobe is excellent. In 2023, it was $6.9 billion, and the quarterly is bringing in cash flow right around that run rate. So it's good to see that their cash flow is solid. As I look at the forecast for the business and looking at where analysts land, the current stock price is $533 when I filmed this video. And most, on average, analysts are saying the stock's worth $600 per share. So some analysts believe the share price is worth $445, and most optimistic analysts believes the stock is worth $730. So the dispersion is not that wide. Everybody's agreeing that Adobe is a good quality company. And overall, they're agreeing that the stock is discounted by about 12%. The earnings per share look good. The current year, they're expected to do about $18.39. I'm using the guidance. I'm not using what the analysts are projecting. And my guidance is a little more conservative than what analysts are agreeing should be the forward guidance. Now, they're expecting to grow that earnings per share at a really healthy rate. The earnings per share is expected to grow over 50% in 2024, but in 2025, it's expected to grow more than 12%, 26, more than 14%. So really good, healthy growth on the earnings per share. So what do I think the Adobe stock is worth? Well, I'm going to get to that conclusion by looking at Adobe's free cash flows and discounting all the free cash flows I expect Adobe's going to produce in the future to today's value. I'm also going to look at their earnings per share and value the company using their earnings per share numbers, and then blend those two figures to arrive at what I believe is a good blended value for Adobe, and then compare it to the current stock price. So to begin with, Adobe's free cash flows are excellent. They have shown a history of growing their free cash flows. And I'm going to use a run rate of $7.5 billion as the first year of free cash flows, which would represent 2024. And from there, I'm going to grow the free cash flows by 10%. And in the first 4 years, and then long-term growth is going to grow at 5%. It's a software company. Software companies, one of the advantages they have is they can increase price on their products. And most subscribers of their product would just have to pay it. You see it with Netflix, you see it with other software companies. So that is my expectation on their growth. And the company is a low risk company. So I'm going to take all those free cash flows and just discount them by 8%, which is a reasonable discount rate for a lower risk company. The intrinsic value of all those free cash flows, the net present value of all those free cash flows is $268 billion of value. I'm going to add the cash and take away debt to arrive at an equity value of the company of $272 billion. The current market cap is 238 billion. So there's a discount available on Adobe. The per share value that I calculated is about $607 per share using their free cash flows. The current stock price when I filmed this video is $533. So there's a 14% discount if I value the company using the free cash flows that I expect from the company. Now looking at their earnings per share that I'm using for this year is $18.10. This is what they're guiding, and it's a little lower than what other analysts are agreeing they expect out of the stock, and that's fine. The PE, I'm going to go with 32. Software companies are more valuable. They're more valuable than a typical, let's say, old school manufacturing company. For example, automotive companies are being sold at like PEs under 12, but software companies just get a better PE. So I'm going to use 32, and I'm going to grow those earnings per share by 12, which is a little lower than the forecasts that I've been seeing out there. And it gets to a per share value of $648 when we look at earnings per share. But the stock price is only $533 right now. So there's about a 22% discount on Adobe. So overall, when I blend the two and I put more weight on the free cash flow method, I get a 16% discount on Adobe. This is a high quality company. And for whatever reason, the stock market decided to sell it off and lower the price. And I am happy to buy shares of Adobe at a discounted price because it is a high quality company. I think part of the reason why Adobe was discounted recently is that a lot of money has been going into AI specific stocks like Nvidia and others. And that's really what is the most popular investing theme for 2024. And I don't doubt that AI is going to be interesting in the future. But in the meantime, when good quality companies that I believe have a bright future like Adobe get discounted, I'm happy to snatch up shares and really build a nice position in a great company. I see that the sell off is not just with Adobe, it's with other software companies as well. I've done a video on DocuSign, and I believe that's being sold off and that's discounted, as well as Zoom and other software companies. I think they provide a really valuable proposition to investors, yet their stock prices have not done that great in 2024. So it's a place where I do see some value to invest in. It's pretty hard to find value right now because the stock market has been going up for some time and stock prices are pretty expensive. So it's good to snatch up shares of Adobe. I hope you found my video interesting, and I really appreciate you watching.